Alrighty, back at it. It's a new month, so that means it is time to do the real estate recap from last month. Now, this is RE Radar, and I am your host and realtor, Nathan Mathisen. And here on the radar, what we are all about is education. And we're all about helping people get a better understanding of what real estate is and how it works. So, whether you're a current homeowner, a future hopeful home buyer, whatever it may be, this podcast is meant to be an education resource and meant to help you out and better understand real estate in your journey. Now, how I'm going to be helping you all out this week is by doing the dive into the stats from last month, as looking at those stats can, of course, paint the picture of what is currently going on in the real estate market and maybe give you a better outlook for the future. So getting it kicked off, what we always look at first here on RE Radar is price, because, well, that's what everybody is always looking for. That's what everybody's always asking. What's the price? What's the price? What are prices in Seattle? What's going on? And in Seattle, residential and condo, the median sold price in January was $775,000, which is up $10,000 from December and also up 0.6% from January 2025. So a great sign, I say. Some years, January is lower than December. Other years, well, January can be higher than December. And in those years, that can sometimes be a sign that we're poised for a great real estate year, getting that early growth. Because, well, real estate, as I've mentioned on this show multiple times, it's got patterns. January, what is it? Well, it's the bottom in terms of pricing. And then each month after January, it goes up and up and up until it peaks in May, before slowly declining or leveling out over the summer months. Every once in a while, you'll get a little push here or there in August, maybe September, a last minute push before. Then it goes down again in the end of year months of November and December, hitting the bottom of the barrel there. So January being up from December and also year over year, even though it's just a small amount, is a great sign. Now, the stat that really paints a great picture, I feel, is the amount of new listings we actually saw hit the market. In December, in Seattle, we just saw 367 residential and condo new listings. Now, in January, that number almost tripled, up to 1,180, a huge bump. It's also up 20% year over year compared to 2025. For some comparison, that would have been the second most of any month in the year 2023. So just comparison to show how far we've gone from the 2023 real estate market to now 2026. Now, the next really key data point I feel is pending sales. As what does pending sales actually show? Well, it shows actual buyer activity that month. Typically, real estate transactions, well, they take around 30 days to close on average. So if I'm pulling up closed sales data, what's it really looking at? Well, it's really looking at 2 months ago. So the closed sales data for January is really looking at the activity in December, which we're past that. That's 2 months ago. We need the more up-to-date data, which is why we pull up pending sales data, which in January, that number was 606, which, yes, it's up from December's 412, but actually one less than January in 2025 that had 607. So we got some activity, but nothing crazy. But I will say, from some other sources I've got, the buyers, they are stacking up, with lenders receiving more and more pre-approval requests compared to last year at this time. And they are really starting to help get these buyers figuring out what they can afford so that they can go out there and start shopping. So yes, I do expect that February, it's really going to build on the January data. Also, think about January. What's the first week of January? Well, it's the New Year's hangover. So a lot of people still, for that first week of January, they're really not looking to do too much. They just want to hang out and relax. So January, it started slow. And then it noticeably picked up in activity, especially amount of listings coming on during the last week. So end of January, it really picked up based on what I was seeing out there on the market and looking at the listings as they come up, because that's what I do. Every morning I come into the office and I'm checking on what's new listing, what's happening basically on the market. And I noticed by end of January, that number was getting much larger than, say, the first Thursday or the second Thursday of January compared to the last Thursday of January. noticeable difference, much larger, much healthier market end of January. Now, one good thing we could point out about the idea of that bigger push on listings coming out compared to the push on buyers is that it gives these buyers, as they do begin to trickle into the market, it gives them more options on the. So looking at the month supply closed, which is how many months it would take to sell off all the current listings at the current pace, that went from 2.1 in December up to 2.5 months in January. Compare that to last January in 2025, where it was 1.8 months. And you can see how this market today is much better situated for buyers to have a few options when they go out there shopping. But if you're a seller, fear not, do not panic, as it's still a clear cut seller's market until we get to that 4 or 5 months inventory mark, which, of note, that has not happened in Seattle for around 15 years. So, sellers, don't panic. Well, buyers, they've gained a little more wiggle room over the past year. With last year, actually, that month supply of inventory, it was sticking around and hanging out around 3.5 months for a couple months there around the May, June period. But the sellers, they are still in a great spot. Now, it's still early on in 2026, but this real estate market is shaping up to be a good market. Sellers, they're going to be able to go out there and sell their homes and make a nice chunk of change. And the buyers, well, they're going to be able to get out there, take a little bit of time maybe with their shopping, and have some good options on the market and get into a home with a solid interest rate. As a quick little note on interest rates, they're hanging around 6.2-ish%, 6.1%. They're going to be in that range for the majority of this year. Nobody is really predicting rates to drop below. Some say maybe 5.9%. So that's kind of the very best interest rate predictions out there, 5.9% by end of year. But a lot of places have them more at by end of year, 6%, 6.1%. So sticking around that low 6% range, which is great for a healthy real estate market long term. Now, before we fully wrap up this episode, I am going to leave you with a little bit of advice, I guess, for folks out there just starting to shop for a home. Buying a home, well, as you guys know, looking at the market, it's a huge purchase. So you don't just want to rush into this. You want to take your time. You want to figure out the reason why you are buying that home, because everybody has their why. Now, it might be you want to break into home ownership for the first time. You might want to be finding a larger home to raise a family in, or maybe it's about getting a larger place to have the aging parents stay there with you and be close by. Or maybe you want to eventually get into real estate investing. You want to figure out that why, because all the whys might lead you to a different purchase and a different strategy when you go out there shopping. So figure that reason out because it affects the search. Now, you also are, of course, going to want to figure out those non-negotiables. Figure out what you need to have at this purchase, at this home you're purchasing, versus what you definitely can't have and what you definitely don't want at this new home you're looking to purchase. As if you do that, you set up those definite non-negotiables, then it's going to help save you time instead of wasting time touring a bunch of these homes that they're not fitting your needs at all. And that's just, so don't just decide one day, I want to buy a home now, and all of a sudden start touring homes without even really thinking about it. Actually take some time before you go out there, think about your lifestyle and what is conducive to it. And then when you do start touring homes, take your time through those tours. Take your time walking through the properties, take pictures, take notes. You're likely going to be touring more than a handful of homes before you actually find the one you fall in love with. So keep notes of things you like and things you don't like as you are touring, as that can be a great thing to come back to a few days later, because when you're touring a lot of homes, they can really blend together. Now, after you've taken a few tours, take a step back and think about all those things again. Think about the why. Think about the things that you feel are non-negotiables, as maybe after seeing some of the homes out there on the market, something in your mindset has changed. And then you can update your criteria so you can then find that one that you really do want. Now, that is all the time I've got for y'all today. I hope you enjoyed, and I hope you learned something at least. and can be better situated in your real estate journey. As always, if you ever have any type of personal questions or a specific question you want to ask me, feel free, reach out. I'm always happy to chat. But until then, this has been RE Radar. Thank you for listening. Thank you for watching. I'm Nathan Mathisen. Peace.